This is a second part of video 10-day trading strategies for beginners. Okay, let's continue. What makes day trading difficult? Day trading takes a lot of practice and know-how, and there are several factors that can make the process challenging. First, know that you are going up against professionals whose careers revolve around trading. These people have access to the best technology and connections in the industry. So even if they fail, they are set up to succeed in the end. If you jump on the bandwagon, it means more profits for them. Uncle Sam will also want a cut of your profits, no matter how slim. Remember that you will have to pay taxes on any short-term gains or any investments you hold for 1 year or less at the marginal rate. The one caveat is that your losses will offset any gains. As an individual investor, you may be prone to emotional and psychological biases. Uh, Professional traders are usually able to cut this out of their trading strategies, but when it's your own capital involved, it tends to be a different story. Deciding what and when to buy. Day traders try to make money by exploiting minute price movements in individual assets, stocks, currencies, futures, and options. Usually leveraging large amounts of capital to do so. In deciding what to focus on in a stock, say a typical day trader looks for three things. 1. Liquidity. Liquidity allows you to enter and exit a stock at a good price. For instance, tight spreads or the difference between the bid and ask price of a stock, and low slippage or the difference between the expected price of a trade and the actual price. 2. Volatility is simply a measure of the expected daily price range, the range in which a day trader operates. More volatility means greater profit or loss. Trading volume is a measure of how many times a stock is bought and sold in a given time period, most commonly known as the average daily trading volume. A high degree of volume indicates a lot of interest in a stock. An increase in a stock's volume is often a harbinger of a price jump, either up or down. When you know what kind of stocks you are looking for, you need to learn how to identify entry points. That is, at what precise moment you are going to invest. Tools that can help you do this include real-time news services. new small stocks, so it is important to subscribe to services that tell you when potentially market moving news breaks. ECN level 2 quotes. ECNs or electronic communication networks are computer based systems that display the best available bid and ask quotes from multiply market participants and then automatically match and execute orders. Level 2 is a subscription based service that provides real time access to the Nasdaq order book composed of price quotes from market makers, registering every Nasdaq listened and uh, OTC bulletin board security. Together, they can give you a sense of orders executed in real time. Define and write down the conditions under which you will enter a position. Buy during uptrend isn't specific enough. Something like this is much more specific and also testable by testable. Buy when price breaks above the upper trend line of a triangle pattern, wherein the triangle was preceded by an uptrend. On the 2 minute chart in the first 2 hours of the trading day. When you have a specific set of entry rules, scan through more charts to see if those conditions are generated each day. And more often than not produce a price move in the anticipated direction. If so, you have a potential entry point for a strategy. You will then need to assess how to exit or sell those trades. Day trading charts and patterns. To help determine the most opportune moment to buy a stock, many traders utilize candlestick patterns, including engulfing candles and dodges, technical analysis, including trend lines and triangles, volume increasing or decreasing. Typically look for a pattern like this with several confirmations. 1. First, look for a volume spike which will show you whether traders are supporting the price at this level. Note, this can be either on the doji candle or on the candles immediately following it. Basic day trading strategies. When you have mastered some of these techniques and developed your own personal trading styles and determined what your end goals are, you can use a series of strategies to help you in your quest for profits. Here are some popular techniques you can see. Also, some of these have been mentioned above, they are worth going into again. Following the trend. Anyone who follows the trend will buy when prices are rising or short sell when they drop. This is done on the assumption that prices that have been rising or falling steadily will continue to do so. Uh, cont- Contrarian investing. This strategy assumes the rise in prices will reverse and drop. The contrarian buys during the fall or short sells during the rise with the expectation that the trend will change. Scalping. This is a style by which a speculator exploits small price gaps created by the bid-ask spread. This technique, while normally involves entering and exiting a position quickly, within minutes or even seconds. Trading the news. Investors using this strategy will buy when good news is announced or short sell when there is bad news. This can lead to greater volatility, which can lead to higher profits or losses. So guys, we end this video. Goodbye.